Over the last 3 years I've been trading crypto, I faced countless mistakes, like over-leveraging, fumbling into trades I shouldn't be taking, and getting way too emotionally attached to what trades I'm in, and allowing myself to lose way more money than I should have. And now, I live in my dream Miami high-rise apartment, I drive my dream car, I make $50,000 a month, and I teach other people how they can achieve financial freedom with crypto trading, just like I did. This video is everything that I wish I had when I started. In the next 20 minutes, I'm going to be giving you all my years of crypto knowledge and trading knowledge, the real stuff that no $5,000 Discord or course will tell you. I'll be giving you the biggest lessons I learned from trading and how I apply them to my everyday life, the worst mistakes I've ever made and how you guys can avoid making them too, the trading rules that I've learned over the years and the things I've picked up on that I think are the most important, and the mindset shift that is going to take you from unprofitable and lost to on your way to profitability and making a full-time living trading futures and crypto. And if you watch until the end, you'll be walking away with a full roadmap that 99% of crypto traders do not have when they start. Let's get right into it. Let's start with the single most important thing in this video and the reason that most people are not profitable. It's because people bounce around from too many strategies and time frames and indexes instead of finding just one that works for them and finding one mentor whose ideas and strategies resonate the best with them. Without this, you're not building a real edge in the market. You're just gambling with extra steps. Ask yourself this: how are you ever intending on becoming profitable if you trade on way too many indexes, you follow way too many time frames, and you watch way too many traders or gurus who are all leading you in the opposite directions and giving you mixed information on what you should be doing? This is what was messing up me personally when I first started my journey. If I would lose a trade, I would move to another crypto or another altcoin, and I would put in another trade and another and another. I would keep on losing and I couldn't figure out why until I finally stopped switching. I stick to one index, one strategy, and then I saw my profitability rate and my win percentage go way up. Now this is all way easier said than done, so let me go over exactly what I did to cut through all the noise and take myself from lost and confused to in control, making money, and on the way to profitability. The first thing I did is I picked out my confluences that I liked and that I was winning with. And for me, that was liquidity sweeps, supply and demand, and break of structure. So if I did not see these three confluences, I would not take the trade. It doesn't matter how good it looked, or how convinced I was, or no matter what other people were saying. If I didn't see my three confluences, I would not enter the trade. The second thing I did is I will now only trade two indexes. And for me, I picked Bitcoin and Ethereum because they mimic each other and I could read how they moved the easiest. I don't trade Solana, I don't trade altcoins, and I definitely don't trade meme coins. You need to find the two indexes that you can read the best and that make the most sense to you and stick to those indexes. Whether it be Bitcoin Ethereum, Bitcoin Solana, Solana Ethereum, Dogecoin, S&P 500 and NASDAQ, whatever you want to do, just find two indexes and stick with this. This will build discipline, and also you'll gain more knowledge over the market and you'll learn how these prices move over time. And finally, you need to pick one time frame to use for execution. For me, what I'll do is I'll analyze on the 1 hour, but I'll execute on the 15-minute only. I won't execute on 1 minute, I won't look for scalps, I won't do any of that. I'll only analyze on the 1 hour and I'll take my executions on the 15-minute if my rules and my confluences are all met. See, the key takeaway is, even if you find success with these different approaches, your win rate is never going to stabilize and you're not really learning anything or becoming a better trader. You're just getting lucky by mixing different probability systems. For example, 1 week, your first strategy might be up 80%, but your second strategy might be down 70%. If you're constantly switching, you're never going to build true conviction or become a skilled trader. I cannot emphasize this enough. Master one thing. But even if you master one model, you're still going to end up losing. Which brings us to our second most critical concept, your main edge. To identify your main edge, first you need to realize what is the single most important thing when it comes to your trading and your confluence. For example, is it liquidity? Is it order flow? Is it market structure? You need to identify this and figure out why is it more important than your entry. Most crypto traders lose not because their entry was bad, but because they don't understand their confluences or they're not using them right. For example, they had no idea where price was actually heading after doing all their research, or they really just don't understand market structure. This is by far the most common mistake I see every beginner crypto trader make. For example, you might see a big liquidity sweep to the downside, and then you immediately long, just pure reaction. You don't realize that this is just one of the few things that needs to happen for you to confirm that you should place this trade. Instead, what you need to be doing is write down all the confluence you use for your trade, understand what needs to happen before you place your trade, study these, trades and then discipline yourself to where you're not entering at all until all of your conditions are met. Everything you do in trading revolves around your main edge, so you need to find a system that works for you and one that you can build your entire strategy and execution plan around. I remember before I learned this lesson for myself, all my trades were taken based off of emotion and reactivity. I would see one confluence get met and I would enter, and I would just kind of gamble on what would happen. But after I learned the system and I applied it to my trading, my win rate went up, I was way more successful, and I was way more calm and collected and in control of all my trades. For me, I broke this down into what I call the 3 confluence system. This makes sense to me both technically and logically. I went over this in a past video, so if you haven't seen it, go and watch it now. So for example, technically, when I'll see a big liquidity sweep to either side, and then a break of structure and a trend change, that means logically that we're reversing and I can take my trades then. So to emphasize what we just went over, if your trading strategy does not make sense logically and technically, you should not be trading it. But even if you know exactly what your main edge is, a lot of traders will still get stuck and end up losing because of our next category, which is having bad psychology. Let me explain. Your lifestyle and your mindset has a huge direct impact on your trading performance. When people say trading is 90% psychology, what they mean is that your psychology is rooted in how you treat yourself outside of the markets. If you're not exercising, you're not eating good, you're waking up 5 minutes before session, you're staying up all night scrolling on Twitter, and you get like 2 hours of sleep, how do you think that's going to affect how you trade during the day? You're going to end up rushing entries, you're going to panic close, you're going to FOMO into trades you shouldn't be taking, and when you start losing, you're going to revenge trade and put yourself in an even bigger hole. I've experienced all this firsthand, so I can tell you what the consequences are of someone who's not living a healthy lifestyle while also trading on the markets. But on the other hand, if you're someone who works out every day, gets up a couple hours before market open, eats well, journals all your trades and your plans, and gets on with a positive attitude every day, you'd be surprised on how much of a boost of performance you're going to have on and off the markets. What's going to happen is that all of these positive micro habits are going to compound into a better psychology and naturally make you a better, more skilled, and more disciplined trader over time. Another thing that I found crucial in self-growth and becoming more proficient on the charts is picturing yourself as the dream version of yourself, making $1, $10, $50,000, whatever. Picture that dream version of yourself that you want to achieve and act the way that person would act. Think about yourself in the future, making $50,000 a month, living in your dream house, driving whatever car you want, and then think to yourself, would this person be eating unhealthy, sleeping like shit, not paying attention to their confluences, and not paying attention on the charts? Most definitely not. These are not the habits of a successful trader. It's impossible to be disciplined on the charts if you're undisciplined off of them. When I first started trading crypto, I was way too obsessed with how many trades I took a day, how many wins I got a day, ignoring the losses, and this led to a very unhealthy lifestyle, and this impacted my performance over time. What I mean to say here is that less is more with trading. I started seeing the best results in my plans when I was journaling everything, I had a healthy lifestyle, I was eating good, I was sleeping good, and the time I spent on the charts was spent valuably, studying my strategy in the market, instead of just obsessing over how many trades I could place a day. A successful trader's life is actually very simple. You should never be a slave to the charts. You need to learn to be efficient with your time, which will overall lead to better mental health and better psychology, which will in turn transform into you being more successful and more proficient when you're trading. In my experience, the one habit that changed everything for me is when I started journaling all my trades on paper. Every morning before I would get on the charts to trade, I would journal down my plan, my confluence, my strategy, and what my goals were for the day. And once I started doing this, I realized everything for me got a lot better, I was winning more, and I was way more confident in my strategy. For me, I discovered very quickly that showing up to the charts without a plan is like going to the gym without knowing what you're training. You're going to wander around aimlessly, you're going to waste your time, and when you leave, you're going to feel like you accomplished something, but in reality, you didn't do anything. So by simply taking one very strong habit that you can implement to your everyday life, you're going to filter out noise, you're going to be less impulsive, and you're going to fix any confidence issues you might have when you're trading on the charts. Now, after everything we've talked about and went over so far, you're going to go on the charts feeling like you know exactly what you're doing and how you're going to become profitable and when you're going to place your next trades. But that's what goes into our next most important thing we need to go over, which is knowing when you shouldn't be trading. Knowing when you shouldn't be trading is just as important, if not more important, than knowing when you should be trading. I can bet you right now that some of your biggest losses you've ever taken are from trades that you knew you shouldn't have taken, but you FOMO'd in, or you got too excited, or you just got restless not getting a trade and you just took one hoping something good would happen. Deep down, down, you could tell that it wasn't right and it was a really dumb idea. But what you did is you overrode logic with emotion and you took that trade anyway and you paid the consequences for it. Listen, you don't want to be Top Step or Apex Trader's target customer, the gambler who's just looking for any entry they can get, hoping something good will happen. I remember when I started, I would get so impatient if I didn't get a good trade for a while. I would ignore the gut feelings that I had and I would just go in, take whatever I could, and hope that I got lucky. And in turn, I would lose a lot of money that I shouldn't have when I knew that I could just protect myself by being patient, staying disciplined, and sticking to my proven strategy that I knew would work. You're just gonna end up donating all your money to these prop firms if you don't follow your set of rules. For me, my set of rules is that if a trade doesn't meet all my confluences, I don't take it. I won't take trades outside of the timeframes that I've already established that I'm gonna trade on, and I will not take any trades outside of my two indexes, Bitcoin and Ethereum, that I've already covered. If you're struggling to see when you shouldn't be trading versus when you should, or you're just not getting the setups you hoped you would for the day, it's important that you get off the charts, you take a break, and that you stay disciplined and stick to your strategy so that you don't end up donating money when you shouldn't be. What you guys need to know about trading is that when it comes to this job, you have unlimited opportunities but only limited capital. A day where you take no trades is just another day with preserved capital. More opportunities will come, I can promise you that. I remember for me, the worst streak of trading that I've ever had was 2 years ago. I lost a trade I knew I shouldn't have taken, but I wanted to make my money back, so I revenge traded, and I lost again and again. And over the next 2 days, I lost 10 trades in a row, which amounted to $33,000 of money that I should have preserved, and I knew I shouldn't have been trading either. My emotions got the best of me, I wasn't listening to my bias or my strategies, and I wasn't following any of the habits that I already established for myself. What you need to understand is preserving capital is the most important thing you can do. Anyone can make money in the crypto market. It's not that hard. What is difficult is preserving and keeping that money that you make. Knowing when to sit out is only half of the equation. Real growth happens after the trade, which leads us into our next category and one of the most important things for me when I was learning how to trade, which is journaling. If you're not journaling, you're going to end up trading blind. You're going to keep on repeating the same mistakes without realizing it. You're not going to enter the markets with a clear head and an obvious plan of what you're going to do. You're going to have less confidence and you're not going to be trading with any clarity. If you're not keeping a trading journal and writing down everything that happens, you're not going to be able to fix patterns that you don't track. You're going to think that your strategy needs changing, when in reality, what needs to change is your behavior, and you're not going to know why you're winning or why you're losing. If you want to start making consistent money in crypto, you need to start journaling. For me, in my trading journal, I write down my daily bias, my executions, what I'm looking for on the market, my goals for today, and my complete strategy, and how I'm not going to take any trades that don't meet my criteria. Journaling will end up revealing patterns in your trading and your psychology. It's the single fastest way to compress that learning curve. Journaling is one of the big reasons why I've been able to take my trading to the next level and pursue this as a full-time career. But if you want to see exactly how I use my strategies and how I took myself from unprofitable to out on my own, trading as a full-time job, living my dream life, there will be a link in the description where you can apply to work with me personally one-on-one. Another big thing that a lot of traders struggle with is confidence. The fastest way to build confidence is by seeing your edge play out the way you want it to over and over again in your trades. The best way to do this is by backtesting or using demo funds where you can do these strategies and test them out and build confidence without risking real money when you're not there yet. For me, confidence didn't come from live trading and winning real money. What actually built my confidence is backtesting and using demo funds and seeing my strategies win me money over and over again before I went on the live charts and risked my own capital. For example, with backtesting, you can review any time frame and see any trades you've taken on demo, and you can see over time that your strategy is proven to work and that you are profitable with backtesting. Honestly, I think this is one of the biggest reasons that 99% of beginner traders end up failing and quitting. It's because they're not backtesting, they're not using all the tools they have at their disposal, and they're not really making sure that the strategy that they want to go for works. The backtesting strategy that I used every day when I was learning how to trade is very simple because it matches my live trading strategy exactly. I would only backtest on the time frames that I would be live trading, the indexes that I would be live trading, and I would only use one strategy, which is the one that would be proven to work the best for me when I was backtesting. If you use any other confluences, strategies, or time frames when you're backtesting, it's going to mess with your results and you won't get the best out of your time. Backtesting shouldn't feel like a chore, it's a necessity. If it does feel like a chore, then you probably don't want it bad enough. For example, let's say you play a sport and you have competitions every 2 weeks, but you practice every day. If you skip all those practices and you only show up to the competitions, how do you think you're going to perform? It's the same with trading. If you trade live on the charts without backtesting or without testing your strategy, strategies, how do you think they're going to go? They're not going to go good, you're going to lose money, your confidence is going to be terrible, and you're going to lose way more trades than you should have backtesting. For me, the tools that I use to keep backtesting feeling engaging and exciting is demo trading. I'll write down all my results from my backtests in my journal, and I'll compare my results by week to see if my strategy is playing out the way I expected it to. Backtesting is going to define your win rate, sharpen your strategies, and it's going to make being on the charts feel like a second nature. Trading is like a language. The more you practice, the more confident you become. The doubts will slowly go away, and the uncertainties you have will clear up the more you practice. But after you learn all this and apply all this to your trading, there's still another trap that most traders will fall into. This is simplicity over complexity. After all the studying and after all the backtesting, most traders will think that more knowledge equals more profit. And this is where everything will fall apart. Sometimes the more you know, the worse off you are. You'll start digging into unnecessary indicators, looking for confluences that don't belong, and you'll start overcomplicating your strategy. Reality is that a good strategy is a simple strategy, one that you could explain to a grandma if you had to. You don't need 17 indicators, every order flow concept, every strategy in the book, or every time frame to go off of. For example, me personally, my strategy is only made up of 3 parts, my 3 confluence strategy that I've gone over in a previous video. I see way too many crypto traders going down every rabbit hole they can, obsessing over every new strategy they find, and trying to put everything together all at once in their trade. This leads to way too much confusion, and traders will get overwhelmed trying to figure all this out. I remember I myself once was like this, and when I tried to do this, I was way too overwhelmed. It was messing with my mental state, my psychology, and my trades were getting way worse because I wasn't sticking to my strategy and I was trying too many different things. If you want to learn exactly how you can master everything we've went over today, as long as take yourself on your road to profitability and turning trading into a full-time career, check out the link in the bio where you can fill out an application to work with me one-on-one, where we will mentor you, analyze the issues you may have, solve any problems you have, answer all your questions, and get you on the right track.